Good morning everyone and welcome back to this new video. In today's video, I've decided to make a fundamental and technical analysis for the upcoming week so that you can actually understand how do fundamental and technical analysis work together. We will start by covering the fundamental part first, then we will head to our technical to find our entries and exit points. All these setups will be sent in our public channel on Telegram as well, so make sure that you join our Telegram channel so that you don't miss any of them. Without wasting any more time, let's get started. So we're going to start by identifying the major economic events and news investors are currently focusing on. So first of all, we have the highly anticipated Fed interest rate cut. So this is almost the only thing that drives all the USD related pairs currently. And the last US labor report showed a significant slowdown in the labor market, putting a huge pressure on the Fed to consider to start cutting rates as soon as at their next meeting in September. Even Elon Musk has suggested that the Fed needs to cut rate as soon as possible. But now the question is, what is the real impact of all of these events on the market, especially the US dollar? Well, the US dollar is extremely weakened by all of these events currently because an interest rate cut always weakens the related currency, and the US dollar will probably keep dropping until the next meeting of the Fed on September 16th. Before going further in our fundamental analysis, let me introduce you FastBull, which is the website I've been using for all of my fundamental analysis. So basically, this platform sorts out all of the important economic news and events that may impact the market so that you don't need to search for them by yourself. So here you can find a weekly economic calendar that shows you all the major events with articles related to this news to help you to have experts and economists point of view before the actual news comes out. This really helped me a lot when I'm doing my fundamental analysis. All of these reviews, all of these point of views of economists has helped me to make up my mind while I'm doing my fundamental analysis. So this is really important for me. You can also find this live chat room where you can chat with other traders to have their point of view as well. Then you can just chat with some other traders in these live chat rooms. Okay, so you can find all the details, all the links for these FastBull videos in the description box below. Back to our fundamental analysis. Now that we have identified the major events that the traders or investors are currently focusing on and how does this will affect the market in the upcoming week, let's now try to identify what pair will be interesting to trade the next week. Well, all the USD related pairs will be interesting to trade, especially gold. Why? Because gold has a highly negative correlation with the Fed interest rate. So when the Fed interest rate goes down, the gold will go up. All right. So we will mainly look for buy setups on this type of pairs, especially gold, and we will also look for sell opportunities on, for these other types of pairs, and especially USD JPY. Now let's open up our chart and see what we can get on these two pairs. So we're going to start with our technical analysis on gold. We're going to go through multiple time frames, especially daily, H4, and maybe a few other time frames. So here we have this daily chart. So on this daily chart, we see that gold is usually bullish here, and this is the reaction from the geopolitical tensions around the world and the inflation that has come down lately in the United States. So this structure is completely bullish. You don't even need to go through a detailed analysis. Okay, so here we just need to identify our latest break of structure, but first we need to identify our inducement. Okay, so I will just mark this inducement after check if this inducement is valid or not. So this is our inducement, and high above here the market attempted to break the structure but failed at the first time, so it was just a liquidity swipe. Okay, so after this liquidity swipe, the market pushed a little bit downside before pushing higher, and finally the market managed to break this structure here. So this is a valid breakup structure. After the break of this structure, the market has come down to take out this inducement. Okay, this one here is a smart money trap. Smart money trap or inducement are completely the same thing. Okay, so this is our inducement. The market has taken out this smart money trap here. So the next time the market will push higher to break this structure here, this one will be our valid breakup structure. Okay, so now this is the current situation. Okay, we see here that gold is trying to come down to take this inducement here, but has already made a small reaction on this order flow here to trap a little bit buyers here. Okay, so I expect gold to maybe drop to this level to take out this inducement first before making any higher move. Okay, so this is a possible scenario. This is our inducement day one, and if this inducement fell, what is our extreme order block? Our extreme order block, there is no extreme order block down below here, so we can only wait for gold to take out to sweep the liquidity of any structure, any valid structure like previous week low or previous monthly low, something like that. Then we can definitely take a buy based on this liquidity sweep. So we have this structure here and another structure which is down here. And if gold drop down to take this inducement here and give you a reaction here, change of character in lower time frame, then you can definitely take a buy here, and your take profit will be at the next break of structure here. Or if this inducement failed, if gold doesn't swipe liquidity but close below it, then we have to wait for gold to take out this inducement here, as this one here is our smart money trap. Okay, some smart money traders would think that this one here is their valid order block, but in reality, this one here is our smart money trap. So there's liquidity just below this structure here. So if gold come down here to swap this structure here, then we can definitely take a buy based on lower time frame confirmation. All right, and the last scenario is that gold keep dropping until this level, which is actually our last higher low here. Okay, so if gold drop to break and close below this structure here, then this will be definitely change of character. Okay, so this is our last higher low here. So if gold drop down here to break and close below it, then this will be our change of character. But as for now, this is the structure. This is the possible scenario that we can have on gold here. Okay, or the other scenario is that gold may push directly higher at this level here and completely break this structure. But I think that there is small resistance above here. Why? Because this one here is all-time high. Okay, so this is the all-time high. It acts like a resistance level here. So gold will maybe struggle a little bit before breaking this structure here. So that's why I expect gold to make a small reaction to the downside during this week before pushing higher. Okay, so this is the structure in daily. Then let's now drop to H4 to see what can we get in 4 hour. Okay, so in 4 hour we also have a bullish structure. So let me get rid of these joints first. We also have a bullish structure, okay, a completely bullish one. So we also need to just follow our structure mapping like this. So this one here is our major swing high, okay, and our major swing low. So we see that this one here is not our major one. Why? Because they didn't break this previous major swing high here, so we cannot count it as our major swing high. Okay, so now this one here is our latest higher high, which is here. So now we have to identify the breakout structures and the change of characters. All right, so this one here, how can we check if this is valid higher high or not? We have to first check if the market has taken out inducement, and you see that the market did take out this inducement here, making this higher high a valid one. Okay, so after that the market pushed downside and try to keep upside later, and the market succeed to break this structure above here. So this lower low here is confirmed here. Okay, so after the confirmation of this lower low, then we have to identify now our next inducement. Okay, so our next inducement is just here. So at this point here, the market, after swiping this liquidity here, the market, if the market has pushed higher to the next candle, push higher to close completely above this candle that has swept this inducement, then we can definitely take a buy based on this single candle order block. Okay, but you see that the next candle, this white candle, has not closed above this previous candle that has swept as swept inducement here. Then we cannot take a buy based on this single candle order block because it's not yet valid here. Okay, so after that the market pushed downside, trying to mitigate our decisional order block, which is down here. Okay, but the market didn't really mitigate our decisional order block. So um, the scenario is that the market may come down here, may make a small reaction to the downside to actually mitigate our decisional order block and give us lower time frame confirmation before pushing higher and break our structure here. So this is the first scenario here. This is our first entry point, which is here. And if this decisional order block failed, then we can expect the market to drop down until this level here. Okay. So this one is our extreme order block, as this one is our higher low. Okay. So this is our valid extreme order block, but you see that the market has already mitigated this order block, so there is no valid imbalance. But you can take another buy based on this shadow, which is here, because this shadow has swept the liquidity of this previous structure. Okay, so this one here is our actual extreme order block, so we can get rid of this extreme order block down below here. Okay, so this is the possible scenario. If the market drop down to this level, it is possible that the market may make a small reaction here, or completely going bullish to break this structure. Or if this decisional order block fail, then we can expect the market to react on this extreme order block here. Okay, and give us a lower time frame confirmation before we can take our buy here. Okay, so this is the H4 scenario, and we can maybe drop to our H1 to see what's going on in H1. But seeing the H4 structure, I can say that there is no clear structure in lower time frame. Okay, why? Because you see here, this is our bullish trend. Okay, so H1 will probably stay bullish as well. Okay, in this area around here, H1 will probably stay bullish here. So let's just try to see what we can get in H1. What do we have here in H1? So this is our inducement, and next attempt we have this break of structure. After this break of structure, we have this next sweep of inducement. So this is our swipe of inducement. So H1 is almost the same as H4 as well. The market has swiped this inducement here and failed to mitigate any valid order block. Or the market, yes, the market did mitigate this order block here, this valid decisional order block, and gave us a small reaction to the upside before failing this structure. So after that, where can we get our next entry? Our next entry may be here. Okay, this shadow here is our possible next entry in extreme order block. Okay, because this shadow here has swept the liquidity of this previous structure, which is here, extreme order block in H1. So as the decisional order block has already failed, then we can wait for the market to come down to this level and maybe try to catch a buy here based on lower time frame confirmation as well. So H1 is almost the same as H4. Okay, so this is it for gold. Now let's head to our USD JPY to see what we can get on this structure. So here we have USD JPY structure. Okay, so we also see that this structure is completely bullish here. Okay, so making a complete structure mapping will be a little bit long here, so we will just go through it very quickly. So we see that this one was our latest bearish trend here, and the market took out this inducement here. And next time the market has broken this structure to the downside, confirming this lower high here. And after that, the market pushed higher to take out this lower high here. So this is our change of character. The market shifted from bearish to bullish now. After that, the market take out inducement, break up structure again, market push higher, come down to take out inducement here, and then push higher to break this structure again, and then push higher again and take out this inducement here, and the market come down without breaking the last higher low here. So the structure is still bullish, so the market push higher, broke out, broke this structure, okay, then push downside, take inducement, again push higher to break the structure. Okay, so this is our latest breakup structure, and this is our latest inducement that the market has taken. And down below here, we have our latest higher low. So this is the point. If the market break it to the downside, then it will be our change of character. And you see that the market did come down to break this structure. So it means that the market has shifted from bullish to bearish again. Okay. So in daily, we have to look for our inducement. So this is our inducement in daily. So this is our inducement. And where is our order block? Decisional order block. I mean, this one here is our decisional order block. Okay. And our extreme order block is high above here. Okay, but I don't think the market will push this high to mitigate or take out any of these structures here, because the downtrend is really strong here, and we see that gold is very weak currently because of the Fed that is willing to start cutting rates. Okay, so I don't really think that USD will push this high to mitigate all of these structures here. Okay, so this is the structure that we can have in daily time frame. Okay. So if the market doesn't push high to mitigate any of this structure here, then we can just wait for the market to create a new structure. The market come down to make this internal breakup structure, and then push a little higher to take inducement here, and we can take a sell based on this new order block, new extreme, or this is not order block here. Okay, so this is the possible scenario we can have on USD JPY in daily time frame. Now let's drop down to H4 to see what we can have here. So let me get rid first of all of these drawings here. So we see that in H4 as well, the market is completely bearish here. Okay, so we have to identify our breakup structures and our inducements. Okay, so this is our in this leg here we have two inducements here. This one is our first inducement, and this one is our second inducement. So I will always choose the inducement that has a higher liquidity, because this pullback here is much better compared to the small pullback down below here. Okay, so this is our valid inducement, and this one here is our decisional order block in H4. Okay, and our extreme order block. Where's our extreme order block? We first need to identify our last lower high. So we have to identify this inducement, which is here, and this one here is our breakup structure, our latest breakup structure. Okay, so if this one is our latest breakup structures, it means that this structure here is our extreme order block in H4. Okay, so this is the possible scenario we can have in H4. So if the market push higher to take out this inducement here and mitigate our decisional order block, give us lower time frame confirmation, then we can definitely take a sell based on this structure here. Or if this decisional order block fail, then we can expect the market to mitigate our extreme order block here before dropping here. Okay, so this is the scenario we can have in H4. And I think that there is no use to drop to our H1 and M30 structures. Why? Because you can clearly see that this structure here is completely moving sideways. Okay, since the beginning of August, as I told you in my Telegram channel, in August most of banks and the companies employees are on vacation, so the market barely moves here. So you see that the market is completely moving sideways. So if you drop further to a smaller time frame, you will not have a clear structure at all. So that's why I will just stay in H4. Okay, so this is the structure we can have here. I will send all of these setups in my public channel so that you guys can see it clearly. So don't worry about it. I'll send it in different time frames and for the different pairs as well. Okay, so this is the structures we can have after we have made our fundamental analysis. And why did we specifically choose USD and gold? Because these two pairs are a little bit correlated here. Why? Because gold, in times of uncertainty, political tensions around the world, gold tends to have a really good appetite for the investors. All right, and the Japanese yen as well. When there is uncertainty around the US dollar, then the Japanese yen start to gain more value compared to the US dollar. So that's why I think that USD will probably drop, and gold will probably push higher. Okay, given all of this situation, all of these things that are going on around the world. Okay, so this is this is it. This is the end of this video. I hope it will help you. If there is any updates during the week, then I will let you know in my Telegram channel as well. So thank you for watching till the end. Then see you next time.